A warm welcome to Be Great Learning series. In this video, we will be understanding how the PF amount is taxable. Before understanding the subject, we need to understand over the years how the Provident Fund organization is operating. Over the years, the Provident Fund organization has improved the process of employee Provident Fund withdrawal. Based upon the UAN, the EPF subscriber can apply for EPF withdrawal online and withdraw his Provident Fund amount. Provident Fund is meant for post-retirement years. Hence, to discourage early withdrawals, the government has formulated the income tax laws. The partial withdrawal from EPF account is permitted in case of an emergency such as medical, house purchase or construction and higher education. The EPF withdrawal can also be withdrawn if a person faces unemployment before retirement due to reasons which are not in his control. When the PF amount withdrawal is taxable. The PF amount is taxable when EPF is withdrawn before 5 years. If an employee withdraws his EPF before completing 5 years of continuous service, TDS will be applicable. In calculating 5 years of service, employee's tenure with previous employer is also included. If employee transfer his PF balance from the old employer to a new employer and his total employment is 5 years or more, in such case TDS is not applicable. Please remember that while calculating the exact 5 years, there is no grace period. If one day less also will not be considered as 5 years. The second condition when the PF amount is taxable. Temporary engagement for some part of 5 years. Say an employee engaged as a trainee as per the certified standing orders of the company for a certain period. During this period, the employer is not liable to pay PF. After completion of the training, trainee will become an employee and he become the member of the EPF. After becoming an employee, he resigns and leaves the job. His total years of experience including training period is 5 years. In such case, he is not eligible to get income tax benefit for the PF withdrawal. The third condition when PF withdrawal is taxable is when EPF is an unrecognized EPF. A fund which is not approved by Commissioner of Income Tax is considered as unrecognized provident fund. Unrecognized provident fund, such schemes are those that are started by employer and employees in an establishment but are not approved by the Commissioner of Income Tax. Since they are not recognized, unrecognized provident fund schemes have a different tax treatment as compared to recognized provident funds. The unrecognized provident fund schemes may have been recognized by the Commissioner of Provident Fund or other formal authority. But for a fund to enjoy income tax benefit, it must be approved by the Commissioner of Income Tax. If you are a member of unrecognized provident fund, your withdrawals are taxed whether or not you have completed 5 years of service or not. In this slide, we will be understanding how the PF withdrawals are taxed. PF withdrawal has 4 components. Employee's contribution. This is the amount contributed by employee to his PF account. This portion of the withdrawal is not taxable. Interest on employee's contribution. This portion is taxed as income from other sources. Employer's contribution and interest on employer's contribution both are fully taxable and they are taxed under the head salary in the income tax return. Rates of TDS on PF withdrawal amount. Amount withdrawn less than 50,000 before completion of 5 years continuous years of service. No TDS. However, if the individual falls under the taxable bracket, he has to offer such EPF withdrawal in his return of income. Amount withdrawn is more than 50,000 before completion of 5 years of continuous service. In such case, TDS 10% is applicable if FAN is provided. If no PAN provided, TDS will be deducted at the rate of 30%. Withdrawal of EPF after 5 years of continuous service, no TDS is applicable. Further, the individual need not to offer the same in the return of income tax, as such withdrawal is exempt from the tax. Before completion of 5 years of continuous service, if employment is terminated due to employee's ill health, the business of the employer is discontinued, or the reasons for withdrawal are not in the control of employee. In such case, TDS is not applicable. Further, the individual need not to offer the same in the return of income tax, as such withdrawal is exempted from the tax. Thank you for watching. Please subscribe my channel for future updates. Thanks in advance for your feedback and suggestions. Be great.